Well, good morning, folks. Hope everybody's doing well. So we're looking at the day 2 of PAL testimony. I'll be testifying here in about 15 minutes or so. Presently, we have the 5-minute chart on ES. So I'm favoring the downside here initially, but that's not to invoke any interest for you to take a trade, obviously. So let's go over real quick and take a look at the dollar index. Okay, on the daily chart. Okay, and this volume imbalance in here is where I took your attention 2 weeks ago, and I maintained the bullishness on dollar. Even through all this here, I mentioned that I'm not abandoning it reaching up into this volume imbalance and above these relative equal highs. So that sets the tone for what? Risk on. I'm sorry, risk off. So it would be lower prices for ES, lower prices for NASDAQ, lower prices for stocks, lower prices for Forex pairs that have the name with the dollar index as the second currency in its pair name. If it's the currency pair that has the dollar first in its name, then it would be a bullish foreign currency all during this run up. Okay, so I'm going to add the lipstick here so that way you can see. We looked for this down here, then from here, we waited for the shift in market structure here. We're bullish all through here. Volume imbalance here. Rallies up, another smaller little volume imbalance in here, which we traded back down into yesterday before they rocket up into the rejection block, which is this closing price on this candle, and then the consequent encroachment of this wick, which is this level here, and then the old high, and then ultimately up into the volume imbalance, which it was delivered to beautifully. That, my friends, is exactly what you're looking for. That's algorithmic price delivery. It has nothing to do with retail. And it's very interesting to see these things repeat over and over again, even though I've been watching it for 3 decades. Incidentally, for those that you're watching, if you are noticing that the stream, because I'm looking at my cell phone as a way of verifying that I can see what I should be seeing, even for the cell phone users. I know a lot of my students actually just watch things through their cell phone, which I don't understand that. You need a bigger screen, in my opinion, but it's probably looking very fuzzy or like not very clear, maybe blurry. If you look in the lower right-hand corner on desktop applications for YouTube, you'll see a little gear symbol. Click on that, you can change it to high definition. For cell phone users, if you touch the video screen that's playing back right now to you, touch that in the upper right-hand corner, that little gear, tap that, and you want to go to quality. For whatever reason on the live streams, it auto defaults to 240, which is garbage. So you want to tap on the quality and then go to advanced and then go up to 1440 or 1080 or whatever your internet will permit you to do before it starts to bog down. If you do that, it should snap into high resolution for you. I see a couple folks constantly referring to that after the fact on my Twitter feed. So big delivery on the upside. Even if we didn't have the PAL testimony at 10 o'clock on the heels of a large range day like that and delivering to a target, which is this here, that right there cools the jets for me for the week. Now, I know some of you action hounds, you want to like, well, what's next? That delivered. Now what? Now what? What are we doing next? Well, we're sitting still. And that's how you hone patience and self-control. And also, PAL testimony at 10 o'clock can change all this. It can rocket up even further for dollar index and send the indices and foreign currencies lower still today. Or we could have a retracement back down into this area here. At this point, I want you to understand my mentality and the position I hold once I have a weekly objective reached. I stop. I know that's hard to believe. I know you see me get in here and trade inside intraday price just about every single day. But when I have a weekly objective like this, I teach my students, and I also like to stop. Incidentally, as a reminder, this week is non-farm payroll protocol, meaning this Friday we have non-farm payroll. I don't trade that day. I don't advocate any of my students should be doing it either. But I know some of you like to get on here and say, well, ICT doesn't know what he's talking about. Look at this trade I took. Okay. Do it live. Trade it live. And then let everybody see what you were doing beforehand. I just don't think it's a worthwhile venture to take on the risk that comes along with trading on the Thursday and the Friday of non-farm payroll. The reason why, and this is for those that are trying to actually learn here, not just spectate and watch ICT Netflix. In your journal, you want to be recording that the weeks of non-farm payroll, which is typically, but not always, typically the first Friday of every month. Now, obviously, last Friday, we had a Friday in March, but it didn't post as what? Non-farm payroll. So it's this week. So tomorrow is Thursday. That's the day before non-farm payroll. We don't trade that day. And we don't trade on non-farm payroll Friday itself. Now, some of you also may be wigging out right now thinking, man, that's 2 trading days. I'm not allowed to trade in. I'm going somewhere else. I'm going to use something else. I'm just going to go and do it. Okay, that's you. But as an educator, as someone that's been doing it a lot longer than probably you have, I have to have rules. And I have to have rules for the students that are under me. And it helps build discipline. And also, here's the main takeaway. The probabilities for precision fall off precipitously in Thursday and Friday of non-farm payroll Fridays. So the protocol for this week, every time there's a non-farm payroll Friday, your task as a trader is to get all of your business done by right now on Wednesday, New York session, AM session. Once we get to 11 o'clock in the morning, it's over. It's done. It's in the books. You do not trade. You do not push the button. Now, does that mean you can't demo trade? No, it doesn't mean that at all. I'm just saying that if you are one of my students that have ventured into live fund trading, which I've never advocated for any of you to do that, but I know some of you have, you want to maintain this rule by not going in and trading live funds on Thursday and Friday non-farm payroll. Yes, the market will absolutely move. Yes, the market will have setups. Yes, absolutely. But in my history of utilizing the things I'm teaching you, the level of precision isn't as precise or consistent on those 2 days of this week. So does it make sense for me as the author of all this stuff to push the envelope of risk in an environment that 3 decades have taught me that it doesn't shine as well in those days? So as a rule-based trader, as an analyst, I have to provide the trader in me a rule or a list of protocols and procedures to follow to keep the trader in line with the analyst expectation that's in me. Because inside of each one of you listening, there's 3 people. The analyst, that's the person in charge of what you're going to be doing, buying or selling. And the trader, that's the part of you that is going to be doing the engagement itself, the timing aspect of it. You're actually pushing the button, managing the risk, using the logic that's being leaned on as the analyst in you. So the analyst has to know what they're doing and have to have a rule-based idea. And it must discipline and, like a taskmaster, hold the trader in you responsible. And the trader's responsibility is to keep the gambler, which is the third person in all of you, at bay. Keep the gambler out of the driver's seat. They're going to wreck you. They're going to take risks because they want to see what happens if they push the button. Bored trading, curiosity trading, competitive, trying to keep up with the Joneses on social media, trading, that type of stuff is what gamblers do. So we always try to keep the gambler out of it. It's always going to be there. Oh, this looks like something I could get a part of right now. I missed 90% of the run, but I can get that last 3 handles. I can get that last 6 pips after it's moved 90. You know what that means. You've been there before. That's the gambler. That's the part of you that just is impulsive. So you don't want to be going into these particular weeks of the month where there's non-farm payroll on Thursday and Friday of that particular week, just pushing the button to see what happens, because you know what they say, F around and find out. And this week historically has done damage to me. I've allowed it to do damage to me. I've blown accounts. That's plural, folks. Okay. I have no shame in telling you, while I was learning all this stuff, I literally smoked my accounts on these particular weeks because I was trying to force something, because I believed other people saying, these are the weeks you're supposed to trade. Look at all the volatility. This is where we got to get in here and make our moves. When the algorithms are really, really not keyed up in terms of precision, there's a lot more interest for them to be a manual intervention. That means a human comes in and intervenes and causes the market to go just outside of, or well beyond, what would be reasonably expected using the things I'm teaching you. So that's not a weakness to say this, okay? It's a strength, knowing where the odds are against me, whereas the classic retail trader, they just see it as, oh, this is another trading day, so therefore I got to go out there and push my edge, and then their edge is dulled because the market doesn't provide the conditions that would be conducive for high probability, low risk. And that's the reason why. So all of that, if you didn't get it all, rewind it later on and write that in your journal, because that's the reason, that's the rationale behind why I teach my students. That's why I myself maintain a sideline position on Thursday and Friday of non-farm payroll weeks. And traditionally, if I don't have anything on in the morning session, I'm done on Wednesday. Now I can, and I have traded morning sessions up to 11 o'clock. Sometimes it was a deviant and traded in the lunch hour, but we can't really do that today because we have what? At 10 o'clock, the Fed chair at 10 o'clock testifying. So in about 3 minutes or so, less than 3 minutes, we'll be seeing him bring his influence in the marketplace, if you want to call it that. I don't believe that's what's going on, but they like to use the Fed chair to do those things. Let's go over to ES. All right, so we're going to drop down into a 5-minute chart. It's a busy chart for an ICT chart, isn't it? That's up here. New week opening gap. Tonight I will have a video on the YouTube channel outlining what a new week opening gap is, what to do with it, how's it helpful, how to plot it, all that good stuff. All right, so initially what I was watching was, let me go to a 15-minute chart. We have a buy-side liquidity pool here, which we've swept above that. And if you look at the 60-minute chart, that's this candle's low, this candle's high, that's the SIBI, it's a fair value gap. That's what I've extended over here. Let's drop back down to a 5-minute chart. And then inside that high, we have a small little fair value gap here in the form of a SIBI. Trades up into that right at 930. Hit that beautifully, perfect, and then came back down, swept the new week opening gap, and now we're back into touching that 60-minute fair value gap. We had relative equal highs here, so that 930 run into that fair value gap took out the buy side. So traders were caught long, took them back below the lows here, and rejection block. Most likely probably stopping them or scaring them out. This morning, I do not have a clear indication as to how I would engage it. So we're really basically just observing. If you're one of those very highly critical viewers that get to the point type thing, like yesterday was very succinct. It allowed me to cover things pretty expediently, and I don't foresee that probably happening this morning. So if you're one of those really lazy viewers, students, That's probably going to be not what we see today. And you can probably just catch this video when it's convenient for you over the weekend or something. But for the real students that are here to learn how to read price action, this is a really good exercise to watch the effects of the Fed chair talking. Now, obviously, it's 10 o'clock. Already 10 o'clock. What has he said? He probably hasn't even had the opportunity to say good morning yet. But look at the flurry of action in here. And here's our new week opening gap down here. If you look at the 930 high, okay, so all I'm going to be doing is pointing out things that are noteworthy for you to have in your journal and showing the points of reference that I'm referring to here, and that way you can study it after the day closes. But this wick here, see that? It went up into that fair value gap, cleared the buy side. Once it did that, watch what this is doing here. Where is it returning up into? Yes, it touches the bottom of the 60-minute fair value gap. Yes, that's permissible. But where are the bodies? Where are the bodies at in these two candles? In deference to this wick. Look at that beautiful return to another week opening gap. It's beautiful, isn't it? It's beautiful. So the next one of interest to me, and I'm sure you probably saw it when I was flashing my screen, which is on the daily chart. Way down here. Okay, so we have these other tools in our repertoire. Not to say that it can't crash down here. I mean, anything can happen. I'm not saying that's happening today, but that's the next new week opening gap that I have on the way. So if we have the focus on that wick right here, and draw a fit on it so you can see. But ICT, I could have shorted there. Yeah, I could have. We could have ran up higher into that 60-minute fair value gap too. You have no idea. I don't have any idea what the Fed chair day testimonies is going to present in terms of volatility. But look how beautiful that retracement is off that 39.74.50 line. It's almost like it was programmed, isn't it? So this price level here is, oh, I can't make that out. 39.92.75. The closing price here comes in at 39.93.75. Is that a 3 or is that a 2? I can't make it out. Let me see. No, it's 93.75. 93.75. 93.75. So the close, yeah, 3993.75. So the close comes in exactly at that price. I'm going to sit right up here. See that? That's probably random. To most viewers that are casually just watching, that's just randomness. But that's not randomness. That's algorithmic. It goes right to that. Now, the wicks can do the damage. It goes just outside the lines. And this is how the algorithm hides in plain view. In plain view, everybody that's watching price, and there's strong deniers still out there saying that there is no algorithm controlling price, when there's absolutely so much evidence to argue the point that there is. And why all of you would even wrestle that idea is beyond me. It's just, I'm sure it's unsettling. It relieved me because it made much more sense why the market does what it does repeatedly, over and over and over again. So prior to this drop off here, that candle right there is 9.55, and we started another candle at 10 o'clock. Powell didn't even get a chance to say anything. And right off of consequent encroachment, after tapping the 60-minute fair value gap that I mentioned, ran all the way down to what? New week opening gap here. Look at the beautiful delivery off of that, back up into another new week opening gap. Now, take Powell out of the conversation. Say that wasn't a factor this morning. This run up to that 60-minute fair value gap would have been a short for me. I would have smacked that. As soon as it went up and hit it, I would have done that. Why? Why would I have done that? And I can say this because you've watched me call these things live now for weeks and months on Twitter. You've watched me execute using the logic that I'm teaching you. So if you're going to wrestle with this and say, oh, this is woulda, shoulda, coulda stuff, move along. There's other people out there YouTubing, and you can be entertained by them. But I would have absolutely smacked that as a short entry had PAL not been a factor this morning. The reason why I would trust that is because we've already done the buy side here, and it also went up into the next premium rank, which is that fair value gap there. So I would feel comfortable getting short there with a stop above the fair value gap once it hit that. It at one time when it was bold face green, all body, no wick at all, when it was touching that, that would be terrifying to the average trader. It doesn't make any sense to sell short into something like that, which is why it's important for you as a developing student using my concepts. You have to have the lipstick, the things that I have on my chart here. I don't have these things on my chart. It's a distraction to me to watch price with it on there because I like to keep my chart clean. But you can't do that while you're learning because you have to have the stuff on there to refer to. And it's like training wheels when you first learn how to ride a bike. It's nothing to be ashamed of. Pretty soon, in a couple months, you won't need to have the things that you're needing right now. You'll work off of a pad just like I do. This is where all my notes are written down. And I'm constantly referring to price, my other charts, and then those key levels that I have noted down, which is basically what I'm showing you here. All these levels here are just in numerical format on a pad. So I don't need to necessarily have these things on my chart, and you won't over time either. But if you choose to keep them on there, there's nothing wrong with that. Don't let me discourage you from doing it. I'm just reminding you that it's very distracting for me to have it on there. But anyway, rate of consequent encroachment of that wick here, after hitting the 60-minute fair value gap low, expansion occurs all the way down to some random 39.74.50 level. This entire run back down into that there, it only went 1/4 point lower than the 39.74.5 level. And that's a gap that's already been traded to. And as a reminder, as I mentioned yesterday, there's folks out there that just absolutely tore up that I'm teaching you something that nobody's ever touched on before. And it's not bragging. It's not arrogance. I want you to understand that these things have been in front of you and no one has ever talked about it. Never seen it before. They don't teach it. They don't know it. They've never traded with it before. It's done. Everybody sees a gap. I'm not saying I invented gaps. Gaps exist everywhere. But how I use those gaps and how I frame a narrative. You never hear anybody teach about how old gap from a week, months ago, weeks ago is useful right now. You don't hear it. It's not taught. But there's logic behind it. There's logic behind weaving together a narrative that if there is an algorithm, okay, this is an argument for you to hold with yourself over the weekend. If there is no algorithm, pray tell, how does the market just randomly between buying and selling pressure sell off right at a consequent encroachment level in a wick that I teach you and drop immediately down into a level that I teach you that will be revisited again and then turn on a dime? If there is no algorithm, how is it that there are traders that don't have any information given to them in books and courses and educators? They don't teach this stuff. So how on earth did it just do this very thing and deliver exactly like it did? It takes more faith in the religion of retail logic that all came together for that to occur. It doesn't make any sense. So, at any rate, let's take a look at NASDAQ real quick. Slightly. Pretty much the same delivery, but that's not a gap. These are my SMT studies. I'm just showing the NASDAQ and the Dow while I'm looking at ES. So let's go back to ES and let's see it. So that's all it is. Just comparing. Nothing in here outside of what was just delivered there is of any importance to me now. I'd be interested to see if it can mount a deeper run into that 60-minute fair value gap. Let me show you what I'm looking at specifically when I'm referring to it. I'm going to scrunch this up here. All right, so we have inside the upper portion of that 60-minute fair value gap. Should we extend above? Because we've already dipped down in here. I was pretty aggressive, and we had a nice little retracement off of the level that is the new week opening gap. When I say the new week opening gap, I'm not referring to the present week. I refer to every new week opening gap as new week opening gap. If you want to have a structure to your identification, let me go back here real quick. This order block here is what I'm looking at in the upper boundaries. That way I can go back to discussing the relationships between the new week opening gaps. If you want to have like a labeling system in your own charts that want to have like representing what new week opening gap, like you can label them by date using the Sunday gap opening price. That would be your new week opening gap label. So if you're referring to it, you're referring to the difference between the previous week's Friday's closing price on settlement, okay, which you'll hear talk about when we get into the video due tonight. And I promise it'll be a very short video. There isn't a whole lot to it, even though it is like alchemy. It's beautiful, isn't it? It's been trending on Twitter since the first day I mentioned it weeks ago, which I think is fascinating. But the labeling system that you can utilize is obviously up to you. You can call each one of these individual new week opening gaps whatever you want to keep referencing or reference them, in a manner that is helpful to you. I don't personally require that because I know if I'm bullish or bearish, I'm looking for close proximity new week opening gaps below me. So it's really not technically difficult to understand, as you'll see tonight. It's not a lot of acrobatics that are required, but the insight that it gives you, folks. Listen. When I started last year and I told you I was going to come out and teach and give you a mentorship level performance openly for free, I told you I was going to teach you things, and then we rolled into this year and I told you I was going to show you what's going on behind the scenes, what makes these markets really book. Nobody else is teaching you that. They got wonderful systems. They got profitability. They have all kinds of gadgets and setups, but they're never telling you what makes the market move. They falsely attribute it to their patterns, their things, their indicators, and that has absolutely no bearing on what makes the market go up and down. I understand that I'm not everybody's cup of tea, but I have exactly what everybody's looking for. It's the truth, and it's undeniable. It's unrivaled. You can't beat the truth. You can contort it and twist it, but I'm laying it out there for you. I'm showing you exactly what you should be expecting to see in price. If there is an algorithm, these things wouldn't unfold like they do. Or if there isn't an algorithm, I should say, it wouldn't be doing these things. But because they continuously do them, there has to be a control mechanism. And the way I discovered it is I noticed that they would repeat many times within a 10-minute window. It'd always repeat over and over and over again within the same expected 10-minute window. And these certain 10-minute windows would occur in specific hours of the day, on specific days of the week, within specific months of the year, within specific seasonality. And the data doesn't lie. It's there. And then when you start looking at price action live, like we're watching here, and you anticipate these things unfolding, you expect to see it. You expect to see these things. If there is some kind of control mechanism in here, it's not just buying and selling pressure, because to me, it makes no sense when I finally took a step back and said, you know what, there shouldn't be a free-for-all. Because that means a hostile entity could come in and crash our markets. If it was all just selling pressure, what would keep a rogue nation with lots of money coming in, what would prevent a large nation coming in, putting lots of money, or a group of nations coming in to pressure by selling short our equities market? Believe me, there are people and countries out there that are not friendly to us in the States. And that would absolutely be a weapon if it was just like they teach us it is. It's a free market. No, it's not. It's controlled. Is it as it should be controlled? There should be a mechanism. And if it's a business, that means it has a process, an algorithm that it follows. And you shouldn't be afraid of it. You shouldn't be upset the fact that it's rigged. You should be thankful that it's rigged. That's what gives you the edge that you have. Because if it was absolutely 100% random, nobody could consistently beat it. Nobody could. And you should take comfort in that. My first week when I realized that there had to be some kind of control. And at first I was angry. I was like, that's why I lost everything. Well, no, I lost because I didn't know what I was doing. See the difference there? Responsibility. It's responsibility. And for many of you out there that listen to me that are always taking shots at me about how there isn't an algorithm because you know somebody's cousin's uncle who's a bank trader and they don't trade this way. I'm talking about a tier a little bit higher than him or her. They wouldn't know this because they're indoctrinated with all of their learning. The Goldman Sachs boys. They only know what they've been trained to view. This is what the market does. All we're trying to do is follow these tools, these things that have no bearing on price. No. And when you strip it away, peel back the onion every layer at a time, you start seeing things that just repeat too consistently, too frequently, too precise. Look at that fair value gap. I mean, the new week opening gap down there at 39.74.5. And look where we're at right now. Isn't that beautiful? Like, that's beautiful to see something that is completely hidden from everybody else. Outside this community, they had no expectation of seeing it going down to those levels. They had no expectation whatsoever. But you're seeing it. You've been seeing it day after day after day after day, delivering. And what's actually occurring? I mentioned it before, but because this might be your first time seeing it, so I don't know when you're coming to the channel, but a new week opening gap is a real dynamic fair value. It's a range between two specific price points that are fundamental, if you want to call it that. Where did we close the previous week on Friday? And where did we begin trading this new week on Sunday? Between those two price points, there's what? There's uncertainty. And uncertainty builds what? Opportunity. Where there's a difference of opinion, that's where the trade exists. Everyone that thinks it's going higher, opposed traders thinks it's going to go lower. That means you have a buyer and a seller. That's the reason why the new week opening gap works, because there is a real liquidity void. There's a separation between those two price points, previous Friday's close and Sunday's opening price. So what the market algorithm does, it delivers. Buyers and sellers don't take it there. You might be fortunate enough to be in a mood that rides to these levels. You did not push it there. Everyone on the trade with you in that right direction did not push it there. It's going there regardless. That's the part you don't understand. And I don't care who you are. I don't care who you worked for, who you work for now. It doesn't change the facts that this is going on every single day. And I'm predicting it. I got case studies after case studies on Twitter. And now traders are using it, making real money. Price is going to that range between Friday's closing price and Sunday's new opening price to offer fair value to the marketplace. For you and I, not necessarily. It's for large fund interest. It's to get large funds to bring their trades into the marketplace. Because what? Smart money, they're not doing one contracts. They're not trading 5 handles in a day. They're putting in size. And how do they put size on? They have to have a counterparty that is equally, if not more, interested than they are. So the market delivers it by algorithmic principles, and when that price gets delivered, because it's going there anyway, once it goes there, large funds either come in or get taken out. And that provides the counterparty liquidity for this entity that is deemed smart money, which is not bank traders at UBS, Citi, Credit Suisse. No. We're talking up above them. The folks that they're not going to be on social media. You're not going to be interviewed on CNBC. Okay, I'm sorry, but there's a whole different category that you're just not aware of. And that's who's engaging like this. That's why it's not in books. That's why no one's talked about it before, because they're not supposed to talk to you. They're not supposed to be divulging anything. And here's this joker on YouTube talking to you about it. I'm just talking about demos. I'm just talking about paper trades. That's all I'm talking about. I'm talking about a language I created. That's all we're talking about. So we're halfway between one new week opening gap and the lower one that made the low of the day so far here. And we're about the midpoint of that long wick. So that's consequent encroachment. So I'm my eyes there. I'm watching it here. I believe I'll have the video up by 10 p.m. my time. So that way, don't be sitting like on bated breath, waiting for the video to drop, prior to that. About 10 o'clock tonight, my local time, which is East Coast time on the U.S. That's when it'll probably be about 15 minutes or less of a video. It's not going to be very long at all. Very short, succinct, right to the point. This is what you do. This is how you make them. This is how you dress your chart with it. Note the reaction halfway on that wick. See that movement? There's your consequent encroachment at 39.80 3/4. The low on that candle comes in at 39.80 1/2. Only went one quarter of a point, one tick below consequent encroachment, and then look at the reaction there. That is tradable. That's algorithmic delivery. Not random at all. So even in this sloppy mess, you can still see signatures and notes. That's the benefit of us being together today. That's all I'm doing. I'm pointing out things that I want your attention on when you're watching every day. Every day. What prevents us from going in and pushing a button today is the uncertainty that the market maker, that is in control of the algorithm, that can stop the algorithm from delivering on its macros and manually intervene and reprice wherever they want it to go. And you don't know when that's going to happen when the Fed chair is talking. I don't know that, which is the reason why I tread carefully. And I don't do anything. I observe. It keeps me close to the market by watching it. It's wonderful exercise for you as a developing student. And that way you're not becoming impulsive or chasing profits, whereas you're trying to learn the science behind how these algorithms operate. So think about the delivery from consequent encroachment down here, which I talked about at the time. It's not cherry picked, okay? I told you to watch this at the very second as it was trading there. And where it delivered from here all the way back up into this 60-minute fair value gap. Where's the buy side? Resting right above here. So we went all the way down to this new week opening gap low. We're inside the 60-minute fair value gap again. We've already did the buy side here, so that's not what we're interested in. We want to see, does it want to go above this high and trade in this order block and completely maybe come all the way back up to the high end of that 60-minute fair value gap, because it's already pierced this low and this low. What was below these lows here? Sell side. How far can it go down below an old low ICT? How far? How do you know how far it's going to go and it won't keep going? New week opening gaps, new day opening gaps, opening range gaps, the gaps between where we closed yesterday and where we open at 9:30. There's 3 specific gaps right there. I'm not going to have all of them this week, but I'll have the new week opening gap tutorial video tonight. And I don't know when I'll do the new day opening gap video, but that'll be next. And then I'll do the opening range gap video. So that way you'll have the details on gaps and how I internalize them, how the algorithm will refer to them. There's so much if you just simply put down the willingness to want to arm wrestle me and stop trying to say I'm rebranding anything. None of this is anywhere. It's not in any books. You can get yourself $1 million if you can find it in print. Told you that. 1996, that's when it was codified. Sorry, that's me. But that range movement from the consequent encroachment of this wick, after clearing the sell side below this low and this low, I'm going to drop a line on it. Okay, so that way you can see. So below this low here, oops, sorry, should move that one. Okay, so we have 2 lows here that are relatively equal. And you always want to put it right on the lower of the low between the 2. So that's, I'm a little bit below it, that's okay. But from here and here. So what's resting below that? Sell side liquidity, sell stops. Traders that would want to protect a long position, they put their sell stop below that. Traders that want to sell short on a breakout, thinking that weakness that comes in, they would see that as what? A reason to be short. So if what I'm teaching you is we attack that liquidity. And the question that comes up a lot is, okay, how do you know how far if you want to be buying these stops? Because I teach how to do that in the core content that was uploaded last year on my YouTube channel. And folks, please stop emailing me asking me to join my paid mentorship. I'm mentoring you right now for free. This is mentorship. Okay, I don't want your money. I'm never going to charge your money. This is it. Okay, I mean, I'm having fun doing this. You should be keeping notes and benefiting from all of it. But the question many times comes up is, you know, how can you trust? How do you know? How do you know then when it drops below old lows to be a buyer? How do you know how far it can go? Like, where would you place your stop? Well, in this case, this helps a lot when you have information like the new week opening gap, because we would expect it to drop down. This was in the chart. It wasn't off screen. It was mentioned to you that this is an interesting level. If we drop lower, this is where it's going to likely draw to. It's below these relative equal lows. So below here is sell side. So there's layered sell stops below these lows that you don't know. And the depth of market, the DOM, those orders can be spoofed. Just because you see them prompting you, saying there's this many willingness to be a seller or a buyer at a particular level, doesn't mean that that order is going to be there when price gets there. Spoofing is a real thing. Spoofing is where they put an order there, and then by the time it gets close to it, they pull the order away. So it's a gimmick. Okay, I'm sorry if you like to use that tool and it's helpful to you, that's great. But don't argue and say that that's the reason why the market's moving around, because it's not. But below these lows, there's sell side. So how far can it drop down below old lows? New week opening gap, new day opening gap, opening range gap. There's your 3 tools. How far can you trust the move above an old high for a turtle soup? I just taught it to you. Oops. Magic can come out of nowhere, can't it? So the market drops all the way down through relative equal lows into some random level, new week opening gap, goes 1 tick outside of it. Why? Remember what I was teaching you? It likes to create these little mohawks, okay? These little mohawks that overlap a little bit. Why? Because there has to be what? the bid and ask difference. So if a trader wants that 39.74 and a half, it has to trade where? 39.74 and a quarter. And that's what you got here. Everything makes sense when you understand it that way, instead of taking your price patterns and animal harmonics and Elliott wave things and try to cram all that stuff into a reason why price is going up. It has no reason. There's no basis at all for why the markets are going to be booking this way. It's going to go up for buy stops, or it's going to go up to redeliver to an inefficiency like a fair value gap. That's it. It's either going to go up for that reason for longs to sell their long positions too, or it's going up there to start a new sell-off. So that way shorts can be implemented, and then it's going to be looking for an opposing liquidity. The market goes down for sell stops. It goes below a low or an old lows, or it goes down to an inefficiency that it will reprice to. That's it. If it's not doing that, guess what it's doing? Consolidating. Is that hard, folks? I get complaints all the time from people that don't really want to learn, or they sell something. They have a competitive nature because they're trying to sell their thing. And I'm out here teaching what makes the market really move, and it's booking perfectly to the tick. And they'll say, I'm overcomplicating things. I'm not complicating anything. That is absolutely easy. It's totally three conditions. It's going up for one of two reasons, going down for one of two reasons, or it's consolidating. I teach you when it's going to consolidate. When we're ahead of big news or event like this, we don't know what Powell's going to say and how the market makers are going to utilize that. So what is it doing? It's consolidating. We're not trading. Why? Because it's likely to do this. And if it does move, it's uncertain. So you can't really trust it. So there you go. Now you know when the market's going to consolidate. I just taught you. I've taught you before, but I just reminded you this is what it looks like. But when you're bullish, and when I'm bullish, I'm looking for one of two things to happen. It's going to go up to buy stops above a high or relative equal highs. Or it's going up to a premium fair value gap, some kind of inefficiency where the market has dropped in the previous, I don't know, it could be as far as 60 days back. Some old high, some old price decline where there is a fair value gap. It's going to go up into that level there to reprice. That's the only two reasons why price is going to go up for me. That's it. It's simple, isn't it? It's very, very simple. That is not complicated. No matter how much you want to torture it, it's never going to submit to being complicated. That's easy. It's going up for stops or it's going up for a fair value gap. Boom, done. Over. Simple as that. Are you bullish? Okay, you're looking for one of two things. Is there a fair value gap? Nope, there ain't no fair value gap. So what's it going to go for? The stops, baby. It's going to go right up into those buy stops. Just like you're seeing it happen right there. Is it complicated when you look at it that way? Honestly, I'm asking sincerely. Because I don't believe it is. I don't believe it's complicated. It's very simplistic. And it's nothing that you should be wrestling with and trying to feel overwhelmed with. But you're trying to learn it too fast. And you can't rush it. It takes these types of things here, sitting here and watching price action. When we were down here, I said, watch that wick. Okay, that's not cherry picking. That's me taking your attention right to a very specific price level. Not a zone. Not a zone. A very specific price level. The midpoint between the closing price and the low of that candle is consequent encroachment. And I told you, as this candle was dipping down in here, I said, watch that level right here. And then I said, we would want to see what? We want to see it trade back above, deeper into that 60-minute fair value gap, which is that pink shaded area. And more specifically, aim for the buy side liquidity resting above here. Why? Because we've already worked and utilized this fair value gap multiple times. So if it's going back up here, it's not going back up here for this. It's going back up for what? The buy stops resting above that. Is that complicated? Was that complicated at all in my delivery about it? It's not complicated, folks. That's not complicated. What you're feeling, if you think it's complicated, is you're feeling this insatiable desire to be able to mimic what I'm doing immediately. And that is not going to happen. It takes time. It takes time doing what we're doing here, reading price action when there's no trade involved. You're not influenced by the profit or loss. You don't care. You're indifferent to it. And that's exactly what you need to be doing while you're learning how to trade. You need to learn how to read price first. And no educator pushes this part because they want your money. They want your subscriptions. They want your everything to paying them. I don't need that. I'm giving you my time for free. I could be out here doing whatever I want to do right now, and I'm spending it with you. Who's making the greater investment here, me or you? That's what it boils down to, because a lot of you aren't really trying to learn. You want something to be easy, 1, 2, 3, watch a video one time, and you'll be able to go out there and do it right away. And I'm sorry, I don't have that for you. You can't get this level of precision with watching a video a couple times and there it is, you got it. You got to be in the charts. And that's why I unfortunately separate and divide the people. I'm very divisive, and I don't shy away from that because I want to know right away if you're a weak-minded, impatient person and you can't listen to the lectures and jawboning, you won't make it here. So leave. The ones that go through this, they're the ones that make it. Every one of these people that I'm going to be interviewing that make money with real money, they listened. They did the things I told them to do and didn't do the things I told them not to do. That's what separates them from you, what they're willing to put themselves through. These markets are extremely complicated, but I have removed that complication. I've applied a science to it. I've literally codified a logic so that way you can go in and see exactly what to anticipate, when to expect it, why it should happen. I covered every base for you. Every base. There's no reason why anybody watching these live streams do not sit there and think to themselves, what the hell am I doing? Why haven't I been doing this? This makes perfect sense. This is exactly how I want to trade. I want to see the market like this. This is like knowing what's going to happen. And that's why it's called futures. We're predicting the future. Not everybody can do it, which is the reason why majority of people lose. But I have a transferable skill that you can get from me. And all you have to do is show up. Just show up. There's no PayPal. There's no credit cards. No coupon codes needed. No Black Friday sales. I love this. I live this. This is my entire life. I'm passionate about it. I'm passionate about teaching. I love transforming people into financial dynamos. And you're about to see some of them. Some of them have done extremely well. Others, very, very well, but more than not, you're going to see them in their own face, their own expressions, share what it was like for them. And I'm going to ask them questions. Some of the questions you guys gave me as a list of things that you would like to ask if it were you asking a profitable ICT student. Because I didn't want to just go in there and here's my cherry-picked questions. I'm giving you all an opportunity to go in on my Twitter and tell me what questions you would like to see me ask them. I don't want to do longer than an hour. I think an hour is really a lot, but I'm going to present each one of the students that have reached out to me. I have a lot of them that emailed me. And it's not the people that's done spreadsheets. Okay, these people have made money. They have broker statements. They have interviews with funded companies. They have cash withdrawals and receipts. So we're not talking about people that done demos. Okay, we're not talking about market replay reports on NinjaTrader. We're talking about real money. That's what I asked for. That's what you all wanted to see. And they're all going to sit down face to face with me. And it'll be a pre-recorded. So that way everything is professionally done. Nobody can interrupt us. And if I get my children or my dogs come in, I can edit all that stuff out. Live, I don't want to be distracted by that. And the questions will be emailed to all of them. So that way it allows them to have their answers prepared. Like when I was being interviewed by Corbs, like I didn't know what that guy was going to ask me. And some questions, if a person is shy and you may be talking about money isn't a comfortable thing for some people. Other people are like, I can't wait to get on ICT's Jam and flex. I can't wait. That's cool. But not everybody's like that. And it'd be easy for me to cause some kind of a delay or have the expression later on, shared on another comment in the video or a Twitter post where they said, "Oh, I wish I would have remembered this." If I ask them, say, what was your worst trading day? Because that's one of the questions I'm going to ask. Like, what was your worst trading day, and how did you deal with that? And how do you deal with losing? Like, what's the procedure you go through? Those are questions that if you aren't prepared to talk about that, and it's a wrestling match that you've gone through, it might cause you to shy away from being honest. And I want the questions in their hands first, so that way they can wrestle with it, talk about it with themselves, and say, okay, he's going to ask me this, and people are going to hear me talk about that. How do I want to respond? I don't want to be shell-shocked. I don't want to do any kind of gotcha questions, okay? Because that's like the thing that everybody wants to do. They want to, I gotcha. I've got you out there. I've embarrassed you. I'm not trying to embarrass anybody. I want them to be 100% honest, and I want the interview to be organic and no surprises, because I think it would be unfair for any student, any person being interviewed, to get a question upside their head, say, "Oh yeah, by the way, how many times has your spouse stepped outside the marriage?" That type of thing. Not that this would be like that, but you know what I'm saying. Like things that would be unsavory for an interview. We're here to watch people give a testimony on how they make money, what they do, how long did it take them, what did they have to struggle through, what's their goals, what is their routine in the morning, or what session do they trade. These are all questions I plan on asking. And some of you, I've seen other questions that I didn't really think about, but are really good, and I'm going to utilize that. So I have to find a way for them to have their responses in mind, okay, so that way we don't go over an hour. I don't want to be, I'm not going to be doing a lot of the talking. The only thing I'm going to be doing is asking the question and prompting, keeping it moving along. But I want the student themselves talking. I want to hear, this is my opportunity, more so than you. I'm interested in hearing their testimony. Like, I would have been willing to do this for private reasons, but I've made it public that I will be doing it and sharing it publicly. So they all know that it's going up on my YouTube channel. So if you're afraid to show your face, you're going up there, and I want you to give me permission to do that. If you don't want to do that, then obviously the interview ain't going to happen. I will not be doing it on Twitter Spaces. I don't think that's genuine. I could be hiring people, you know what I mean? Like anybody else out there could claim and say, "Oh yeah, he's hired somebody to do that." You don't see the person. You don't see their expressions. You don't see their emotions when they're talking about the good and the bad experience. I want you to see, which is exactly why I watch YouTubers when they live stream. I want to see their face. I want to see the expression when they talk about things that they were successful in, because their face will tell you. I want to see their expression when they talk about the painful things, because their face is going to tell you. When you're hiding your face and you're talking about things like that, it's hard to get to the root of what they had to go through. And if we're going to talk about it, let's really talk about it, right? I have a lot of respect for anybody that would be willing to do this. And I have a long list of people that have reached out to me. So I have interviews for months. And don't be upset if I haven't reached out to you yet, because there's a lot of you. I promise you, if you email me and you want to do the interview and you have proof that you're profitable with broker statements and funded account withdrawals and interviews with the company that funded you, you are absolutely 100% invited to have a conversation with me. I want to hear your story. I want to hear your testimony. And everybody else, I'm sure, would love to see that. If that's something that you want to see and you're interested in seeing, give this video a thumbs up. Let them know, because they may be sitting on the fence about it. And maybe you're shy about it. Like, well, maybe what I made wasn't enough money. Listen, if you're making money, don't think that there's a threshold. The first two guys are obviously behemoths. They've taken pretty sizable, chunks of money out of the marketplace. I'm only using them first because they are the first ones that sparked this whole interest. And I have people that have done 80,000, 50,000, 40,000, 100,000, 200,000, 300,000. You're going to see it, folks. These people have receipts, and you can't argue with that. They are doing it. And that, to me, is very inspirational as a mentor, because They did that on their own. I never one time told them to take any of those trades, and I never told them to trade with live funds. They made their own initiative, took their own initiative, and they did it themselves. It was organic, 100% organic. And that to me is a maverick. That to me is a dynamo. That is awesome. I mean, that fires me up because they took the initiative to go out there and do something. They didn't listen to the naysayers out there and say, oh, this stuff is complicated. Oh, this stuff is fake. It's a fraud. It's this, that, other thing. You're not going to convince these folks. They're pulling down money. Spendable money, not market replay reports, not demo profits, not paper trading. Okay, they're paying taxes on this money. Big difference. Big difference. And I was surprised at the response I got. I mean, it's a lot. I might have to do more than one a week. I mean, it's a lot. I mean, I guess it would be reasonable to expect that, with such a community the size of ours and so many people now getting into it. But at any rate, so while we didn't see a barn burner of a move this morning, and we didn't have a trending model, I gave you something real time to observe. We watched the new week opening gap deliver, and then I mentioned that we were trading down here, watch the consequent encroachment there, and then we would want to see it run up into the upper portion of that shaded area, which is what we did. And more specifically, take out the buy side here. So we've done that. So the difference between that would be, we'll call it 81. So 81 to 4,002. 20 handles or so. That's not bad. What would 20 handles do for you? What if you just got 5 handles out of that 20 handles? Which is what I teach all my students to aim for as a very low rung objective when you first start out. It's easy to see 5 handles in a day, several times. But you aren't going to see these types of setups just because you watch a video. Like, you have to know a lot of things. You have to be in the charts, watching it, paint, key off of specific times of the day. Look for things that have already occurred, which was what I outlined, the sell side below here. These are relative equal lows. We went down below it here. Beautiful delivery. That's precise. You can't deny it. Rolls back up in, and then one more time tries to make an attempt to go down here, but there's no reason. Why is there no reason, ICT? How could I trust that? How did you trust to talk about it? Because you could have did it wrong in front of everybody, and they could have been laughing at you. What I've outlined here, the sell side below these relative equal lows. It goes down to a logical level, not some random place, not some random zone. I didn't refer to anything harmonic down here. These levels were already on my chart when it went down there. And then taking your attention to that level right there, this failure swing, you can now anticipate them if you have the backdrop, the foundation behind it, that we've already went below these lows for sell side, and it went to a level that would be expected. Think about what's going on here by doing that. I'm stating that the algorithm will go back down to this level, below these lows, go there, and be content with that, and then look to do what? Reprice for an opposing liquidity or inefficiency. We had both, buy side and the remaining portion of that 60-minute fair value gap in the shaded area. I don't need it to go all the way up to the top. I just need it to go back to the buy side here. So smart money was buying below these lows. Notice it's doing that when it goes down here. This area here, which is the midpoint of this wick. Let me go back in case you guys just showed up. We were looking for this new week opening gap down here. It delivered it at 39.80 3/4. It came down to 39.50. 39.80.50. That's the low. Look up here in the upper left-hand corner. That candle's low is 39.80.50. One tick below consequent encroachment. That is below this low and this low. So the algorithm is remembering what? It's referring back to this low and this low because they're relatively equal. It does not know. Listen, folks, listen. Listen. It does not know your stop. It doesn't know my stop. It doesn't know how many stops. Your broker does. But the algorithm has no idea. It doesn't reference it like that. It just refers to these points, these PD arrays. So the market does what? It reprices back down below those lows, which is a discount, and consequent encroachment. They're all measurable. And there's no need to go back down to that low. Why? Because it's already repriced to the new week opening gap. And done what? The sell side has been purged. This is just returning back to a point of reference for smart money to accumulate longs. If they're going to buy here in their quote unquote smart money, and they are using what I teach as a market efficiency paradigm, that means they're going to buy stops that are below the market in the form of sell side, and they're going to distribute their long positions to buy side that's resting above the market. Willing buyers at a higher price. That's these stops right here. So they're buying sell side liquidity below these lows here and consequent encroachment. They don't fear the algorithm repricing down here because they know it's already done its job. Big, huge step forward in your understanding about price action if you can see that. So if they buy here, and I talked about this live, it's not like I'm going back in time because it's already happened. I said this live here for you so that we can see it. The logic is real, folks. It's real. If they're buying that, what are they holding for? They're not holding for harmonic patterns. They're not looking for Elliott waves and all that other stuff. They're not counting waves. They're not doing any of that stuff. They're simply looking for the inefficiencies above the marketplace. Where is it in here? Nowhere. Here. We've already done that several times. Buying here, they're going to go exactly where I said it was going to go. The remaining portion of that 60-minute fair value gap up here that hasn't been traded to, once it went lower here, we've only delivered one time here. We went up to a quarter of it here, which is, again, not random. Then it went to halfway, consequent encroachment, and then ran through it. Like I said, that's where the buy side is. So smart money buys discount, sells to a premium. Buy stops that resting above here. They knew those buyers wanted to buy the market when it was down here. When they're down here, smart money, the paradigm shift that you're being taught to have in looking at price action, because it's algorithmic, is you're buying it here with the same mindset that they have. Smart money sees this as buying sell stops at the most opportune time. It's the precise time, folks. It's precise. You can't make it any better than this. The logic is right there. And buying that with the expectation of seeing it go where? Right to those buyers that want to buy high. Now, they don't want to buy high to buy a long position. They have they have a short, and they're holding on to their position here. Maybe there wasn't a lot of shorts. It doesn't make a difference because the algorithm doesn't know the level of float that resides above that. It means the number of orders. How many buy stops are resting above that high? I don't know. You won't ever know. The algorithm itself does not know. Buying it cheap, selling it to people that want to buy it higher. Why? Because I'm targeting their inability to know how to trade. I'm targeting their shield, their defense. I'm busting it in like the SWAT. I'm literally going through it. I'm teaching you how to do that. I'm sorry if it doesn't meet the nice feel that you think investing is supposed to be about. It's not like that, folks. This is war. And when you look at the charts, I have absolutely no moral conflict at all about taking your money or anybody else's money when you're on the wrong side of the marketplace, because you all sign the same risk disclosures when you open up your account. Everybody knows that you're likely to lose money. So if I'm buying down here, I'm doing what smart money's doing. I'm told you that that's what's going to happen there. From here, watch that. And we want to see it deliver up to this area again, but more specifically, the upper half. Why? Because it only went to here, leaving from this high up to the high shaded area here. That's not been repriced to. We only passed through one time here, then up to a quarter. So think about it like this. The range on that hourly fair value gap has been repriced to here, right there at that moment. Then this high here takes it up to that level. So the remaining portion of that fair value gap, in my mind, I'm seeing that range left. I'm ignoring all this. So you're looking at all these things trying to guess which one I should have been looking at. I'm teaching you how to internalize it, because this is the part that the algorithm sees now. It doesn't need to look at all these other highs. This is the one that matters now, because it's traded up inside that old 60-minute fair value gap, but it's left in this portion of it where it has not redelivered to it. It's only been offered sell side. So the efficiency model is that price needs to trade up into that area and deliver price that way. It does two things. It does that redelivery and goes right for the buy stops I told you it was going to aim for. Now, isn't it convenient? Isn't it convenient that the market just so happens to run right up there, clear those buy stops, and now we're right back in the middle of the range again? Hello? Hello? Are you paying attention? Are you paying attention? Are you playing with your Game Boy? Are you texting your girlfriend? I'm listening to this guy go off on YouTube. No. You need to be paying attention, taking notes. Folks, this stuff repeats every friggin' day. Every day. I talk about it in Twitter. I tell you exactly what candle to look at. I tell you exactly what it's going to be aiming for. I've been doing it for months. My private students have watched me call this on a daily chart, just the same way. And it can be done on a 1-minute chart, 5-minute chart, second chart. Yes, that's less than a minute. You cannot, absolutely cannot find anything fucking better than this. I'm sorry. This is perfect. This is the market. And if that upsets you, I'm sorry, but you're going to have to grow up. Because if you really want to know how to do this, if you really want to know how these markets book, you came to the right place. Mr. Wizard's World. We're here. We're here every day talking about the technical science and the stuff that really works. And it's undeniable. It's unrivaled. The precision cannot be found anywhere else. And that's awesome. It's encouraging when you see it, when you finally get your hands on it and you see it unfold day after day, week after week, month after month, year after year. It's infectious. It's intoxicating. You become an alcoholic. You can't imagine doing it any other way. Even in this sloppy range like this, folks. Even in a sloppy range just like this. It's not chaos. It is not chaos. It's all scripted. Now, on better days, when we don't have the effects of a Fed chairman potentially saying something that could be utilized as a smokescreen and repriced completely outside of the scope of what would be reasonable, we can see trending days and keep on adding to the position until it rolls to the far extreme of the daily range, high or low. Some of you might like to think that that's the only way you're going to trade and that's your model. Wonderful. That's nothing wrong with that. That's exactly what I'm doing this for. You're going to find your model before November. You're going to know exactly how you, not everybody collectively, how you yourself, the individual watching this right now, and every time I do a live stream, you're going to learn the thing that you resonate closest to, that makes the most sense to you. You're going to see something that says, you know what? Damn it, that's exactly how I see things, and that makes perfect sense. I'm doing that. I don't care about the fair value gap. I don't care about a breaker. I don't care about new week opening gaps. This is what I'm going to do. Wonderful. And when you get there, bloom where you're planted. Don't tinker with it. No matter what else I teach, don't tinker with it, because you're here to learn how to make money. You're not here to play video games, okay? You're not here to impress people on social media. You're not here to dance for people because they want to see you prove that you can make money. Screw them. You have bills to pay. You have bills to pay. You have ends to meet. You have places to go to and people to take care of. You don't have time to be dancing around for people that don't matter. None of these people matter that's going to demand you to do something for them. You are here to develop a skill set while you can, because this year I'm done. I'm done. The second Friday of November, we're done. ICT's done mentoring. There's no more mentoring, okay? So you have to show up. You have to take notes. You have to put the work in. I promise you, I fucking guarantee you, you will absolutely know what the hell you're doing come November, but you have to show up every day. Stop dancing around and adding shit to this. Oh, I'm going to bring supply and demand thing to this. I'm going to bring Elliott Wade to this. Stop. Leave all that stuff at the door. If you want to pick it up when we're done in November and add it back to everything else, go right ahead. At that time, I don't give a shit. But while we're doing this, this is all that matters. This is it. This is the truth. Nothing else matters but this. You cannot argue. You cannot resist it. It's being shown to you beforehand. You guys bitched and moaned. Oh, you'll never see him go out here and live stream. You'll never see him outline all this stuff because it doesn't work. Dude, I'm doing it every fucking day. Every day. Like clockwork. You can set your watch to me. It's perfect. That's how you would expect it. If it was an algorithm, wouldn't you expect it to be like this? Some of you are thinking, what the hell just happened? This guy's usually putting me to sleep when I'm watching his videos. Oh, yeah. Well, this is what it's like when I'm live. I'm bipolar. And if that bothers you, go somewhere else. I can't not be me. But we're talking about something that I'm passionate about. I'm absolutely passionate about this. I'm passionate about your success. I want you to succeed. I want you to make money. I want you to stop working and do this on your own. Carve out your own fucking paycheck. I want you to have that. Don't you? Don't you want that? Are you here just playing around? Because if you're here just watching shit on YouTube because you're fucking bored, you're wasting your time. You're wasting your time. This is going to keep working. Until they take away the markets entirely, it's going to keep working. The market's not going to change the algorithm. I ain't changing shit. It works perfectly. Is it going to be hard in the beginning because you have all these other things that you're trying to wrestle with? Absolutely. Just like it was for me. I had all kinds of dumb stuff. Books and courses and things that I thought made things go up and down in the marketplace. It's all dumb. It's stupid. And some of them have really good marketing. They make you think, wow, this is it. This is the thing I've been looking for. No, it's not. It's the thing you're being distracted with right now. And when you see, unfortunately, a little bit of success in it, and you falsely attribute it like a religion. Oh, the market went up because my harmonic camelback said it was going to go up there. Man, get out of here. Get out of here. Animal patterns have nothing to do with billions of dollars at risk. Okay? I'm sorry. It doesn't work like that. Doesn't work like that. The market's going to go where the money is. If there ain't the money in there, they're going to engineer it. That's the way it works. Above that high right here, buy stops. Somebody's short. We don't know. Retail Rick, he's short here. He's going to put a protective stop loss in there because the books say put your stop loss right above the high. He feels great when it goes down. He's going through all this chop. He's thinking, okay, maybe it's just one of those moments where I have to wait. ICT talks about this right here as a fair value gap. I got to trust it. He don't know what he's doing because he watched 3 videos and now all of a sudden he's a professional, right? The market drops down. He's thinking, all right, I'm all in now. I'm adding to it. It's great. Go watch TV. Go play golf. I'm going to be good for the rest of the day. My stop's in place. What do he make? A mistake. He traded with logic that doesn't work. He doesn't know about the new week opening gap. He doesn't understand liquidity. He doesn't understand the facts that this day is going to be consolidation because of the Fed. The market's already delivered this week, folks. It went to that dollar objective. It's non-farm payroll week. Who's in a hurry right now? Who's in a hurry? What big money entity was going to think to themselves, you know what I need to do right now? I need to take all of our customer assets and put them at risk because non-farm payroll Friday is lit. We got to get in there and make all the money on Friday. Let's get in there ahead because, it might be a big mover. I'm sorry, but that's not how this business works. Sorry. A lot of you bring comic book logic to trading when you need a PhD level education. You need to understand how the human mind thinks, how it behaves under pressure. When it's in reward, they feel like they can't lose. And that's why you see these sudden rips other direction. They don't want to give them the chance to realize they're wrong and collapse their trade and before removing what? Just like spoofing on the depth of market. They don't want them to pull those orders. So what happens? They have to run for them aggressively and quickly. Otherwise, they can't participate and utilize them as counterparty to their selling of their long position they accumulated down here where I told you. Folks, that's not complicated. That's not complicated. That is not complicated. What's complicated for you is you want to push a button and take a trade and make money right now. Because that's the only definition for you that this works, is if it makes you money right now. The few times that you've spent with me so far this year. You're going to fail if you have that mindset. You have a lot to learn. You should not be trading at all this year. If you're here to try to learn, that means you're not trading. Close your live account. Don't even leave it open because you're going to do something impulsively. You're going to see me doing a series of weeks around on fire and moves that you never would have imagined being seen and called out beforehand in detail. You're going to see that. You're going to see me pushing the button too, folks. And I don't want you being led into taking that as a live trade. Because even if you do make money, you're not learning from that. As much as you painfully need more money, like everybody else in the world, you don't learn this by putting real money at risk because you're going to be worried about, am I going to be wrong this time? If it's moving a little bit, I'm trusting it. I've been here before, but it's retracing a little bit. Oh, no, I can't. He's probably wrong. This is going to be the time he's wrong. I should have never took this trade. I'm going to close it, and it's still going to go in my favor, and you won't be in there. But you've taken a loss because you got out while it was in a retracement above the entry or below the entry in deference to a long. That's why copying people is stupid. Copying me is dumb. If you're going to try to trade, that's the stupidest thing in the world. Now, if you don't want to learn how to trade because you know yourself better than anybody else would, and you know you're not going to be disciplined, and you just want to have someone that's skilled, that provides signals to you, there's absolutely nothing wrong in that regard. There are people, even in my community, that are just like that. They just don't have the rule-based ideas or discipline to maintain a rule-based strategy and say, I'm not doing something right now because the rules say not to. They exist even in my community. Human beings are people that are spread across a diverse spectrum. And just because they are in my community, they hear the same videos and watch the same thing, listening to me right now. It doesn't mean that they're going to be responsible. There's lots of irresponsible students of mine. They want to blame me for the things that they did when I had no business talking about anything for them to take a live trade, especially Forex, and they're taking trades in Forex, which I'm not touching on right now. I took a trade because you told me this is what happens. That's a trade that you took. You took that. Own it. You're going to have to do that the rest of your life as a trader. You can't fault everybody else but you. When you do it wrong, own it. There's an opportunity to learn from that. Love the fact of being in these charts. If you don't like watching real-time price action, back testing old price moves and studying every small little detail about it, I'm going to tell you something. This is honest to God truth, and I'm telling you, there's no other way to describe it but this. If you don't love that part of this, you will not be profitable. You will fail. You will blow your account. You will fail your funded account challenge. You will fail to keep your funded account, even if you got it, if you don't love this aspect of it, because that's what this is, folks. You got to look at these candlesticks and love it. You got to love it. You can't stand weekends. You want to see these candles paint. And when they're not painting, you're fucking miserable. That's just the way it is. That's what makes a trader a trader. Because if you don't have that level of passion, you will not endure losses. Yes, they're going to come. Even with my stuff, you're going to lose. I lose. You're going to lose. It's normal. It's a transaction cost in this business. And unfortunately, most people that come in here are not equipped to see the adversities that come with embracing uncertainty. A lot of folks can't do it. How do you know? How do you know? I've already taught you. I told you. But that won't suffice for some of you. You want to know where it won't ever hurt you, where you won't ever take a loss. That doesn't exist. And if you think that exists, get out of here. Get out of here. Just go. Don't even watch any more of my videos. Perfect trading. Perfect never losing trading. Getting at the highest high and at the lowest low every single time. Knowing every single move, being a part of every single move. Nobody can do that for you. You have to sleep. You're going to get sick like I did last week. You're going to have a family to take care of like I do and like you do. Some of you have jobs still. Some of you run businesses. Some of you are in school. You can't be in every move. It's impossible. So how often are you looking at things unrealistically and pressuring yourself with things that don't need to be worried about? Those are not big stones. They're small little pebbles that you easily just take your shoe off, drop the pebble out of your shoe, put your shoe back on, and keep on walking forward. But many of you are just trying to do things well beyond what I'm outlining for you. Expecting yourself to know how to do it too soon. When I'm not expecting that, and I'm the instructor, it takes time. It takes time, and you have to allow your patience to form and build responsibility. And if you can't do that, it doesn't mean these concepts fail or that they've changed the algorithm or it's become the new retail. It just means that you aren't ready. That's all. It took me years to get an understanding, to know what it was I was looking for. And then even after that, I tinkered with it, which is why I told you earlier, once you find your model and you're comfortable with it, even though it doesn't deliver every single day for you, don't abandon it. Learn how to trade with that one model because it will teach you how to allow yourself to broaden your expectations and your understanding with other models that I teach and other tools. But you have to do one thing well. You just need one thing. Buying a fair value gap, shorting a fair value gap. Shorting a breaker, buying a breaker. Aiming for buy stops or aiming for a premium fair value gap if you're long. And reverse it for being bearish and short. It's simple, folks. That stuff is simple. Just because I have a lot of tools and a lot of weapons in my repertoire and a lot of concepts doesn't mean I'm bringing everything to every chart. You're only trading what's in the chart. That's it. If it's not in the chart, you're not referring to it, right? So how hard is that? That's not complicated. But anyway, I gave you something real time. It panned out perfectly inside of a day that was already predetermined to be choppy and listless because of the Fed chairman talking. You have to know your economic calendar, folks. And then tomorrow, being Thursday, day before non-farm payroll Friday, and Friday being obviously NFP. It's a day where it's a gamble. And it can take it anywhere they want. And I don't have tools that deliver a high degree of probability that I can trust because I think that those events are highly manipulated. That means there's manual intervention. Manual intervention, ICT can't beat that. Okay? I can't. And there's no shame in that. You want to be told where the limits are, right? You would want to know. I would want to know that. What are the strengths? Everything I talk about. How it's unrivaled. But what are the weaknesses? There are certain times of the month around certain calendar events that precision will evade you. It doesn't matter how long you've been trading. It doesn't matter how good you think you are, because I'm the author of this stuff, and I'm telling you, Precision will escape you on these days over a large sample size. Once in a while, yes, I can get out there, I can call the low, trade the low, run up to near the high of the day on non-farm payroll. I can do those things, vice versa. Some of my students can do some of those things too. But does that mean it's a steady diet of every non-farm payroll we can do that? No. Sometimes the non-farm payroll event is a moot point. It just doesn't do anything. It looks like this right here. A little bit of a squirrely move at 8:30 and then doesn't do anything. And other days where it just really takes off and runs and runs and runs and runs, and who cares if it does? One day isn't your career. One trading day does not, and it should not, encapsulate your career, but you trade like it is. Every trade. It's a make it or break it. You got the Rocky theme playing. Come on. It's a trade. If you lose, who cares? If you win, who cares? You're indifferent to the outcome. That's how professional traders conduct themselves. They don't care about the outcome. They're not over leveraging because they need a big monumental win to share on social media to get their dopamine hit, their likes up. They're in this to make money consistently and manage risk. If they take a loss or a series of losses, it's okay. It's part of it. They're not sharing it on social media so that way they can compound the pain. And equally so, you're not sharing your winners so that way you can get a sugar high. Because as soon as you do that, this is what's going to happen. Yeah, man, that was amazing. Then you're going to take the next trade. And that trade loses. And then you feel bad because you're like, oh, my sugar high's gone. Let me get it back. And you lose again. And now you were up 4% on the day. Now you're down 6. You ain't sharing that on social media now, are you? So don't provide yourself a means of being deflated by inviting social media to judge your performance. It's personal. It's absolutely personal. And if you're learning and you don't know how to trade, the worst thing you can do is share your results while you're learning, because you're not going to get the advice that you're hoping for. You're not going to get the feel good, warm and fuzzies. Somebody invariably is going to be jealous. And they're these miserable creatures. They're going to come up to your post, creep in there like a snake, and talk about how what you did was not good enough. It was stupid. That's nonsense. You got lucky. They're never going to tell you what you think they should or what you want them to do. Just like your family they're not going to understand what you're doing. They're not going to believe what you're doing can be profitable because they can't accept the fact that if you are, you're going to be doing better than them. And that's the way friends and family operate. They can tell you to your face they love you, but they love you only as long as you are just like them. And when you start crawling out of the depths of mediocrity, and they can start reflecting on how they've made mistakes and not really pursued anything in their own personal life, and you're succeeding, and they're still freaking lazy about doing anything about it, they're not going to cheer you on. Don't ask for outside cheerleaders. You need to be your own cheerleader, and that's done in your journal, your trading journal. That trading journal that you're building this year, that's going to be the best damn trading book you've ever read in your life, and you wrote it yourself. Because it's going to have real experiences that you were there. You back tested that. You watched that live session. You called that move. You saw it. And eventually later in half a year, you'll be paper trading it. So that way you'll have a real engagement with it. That's encouraging. That's the stuff that you want to build yourself up with. Things that you had your hands all over. Not, let me borrow this guy's momentum and copy his trades, and if he makes money, I make money, and I can feel like I'm a good trader. That's not trading. I'm sorry, that's not trading. That's mimicking. And I have a disdain for that. I can't stand it. Because to me, it makes no sense why anybody wouldn't just go through the struggle. Because it is to learn this. Whether you learn from me or somebody else, I mean, it's hard. You have to look at yourself through a mirror that these markets will provide for you. And you're going to discover that you aren't the person you thought you were. You're going to have character flaws that are absolutely shocking to you. You're not as patient as you thought you were. You're not so disciplined as you thought you would be. And that provides opportunity for you to improve upon and build yourself up. A consistently profitable trader, let me explain something to you in closing. One of two things is going to happen. You're going to do very, very well this year in learning how to reprice. And that is going to result in one of two things. You're going to turn into the biggest prick that you could ever imagine, because you're going to have a skill set that you can literally sit down any given day of the week, go in there and make what you make a month in a trade. And you're going to know that you can do that any fucking day you want to. That is power. That's power. That brings a level of confidence that you can't even understand right now. And conversely, there's going to be the other half of you that's going to learn this, have that same aptitude, that same skill set, and you're going to think to yourself, wow, what a wonderfully blessed position I'm in right now. I am so thankful that I have this skill set right now, that I can not only impact my own life, my personal family's life, maybe even a friend or a stranger. And you're going to conduct yourself in a manner that isn't ugly, that people aren't going to look at you and say, wow, you're an arrogant douchebag. Even if you are good at trading, they won't have anything bad to say about you because you're not conducting yourself in a manner that draws attention to yourself like you're some kind of fucking hero. That's the problem in this industry. Okay? We need less of that. And I'm hoping that what I'm creating with all of you, yes, you're going to be monsters. You're going to be savages in the charts, in your trading. Yes. I don't want you to be a social media douchebag. A lot of men can't wait to do it. But that would be an embarrassment to me, because I did that stuff. And it's embarrassing. It's shameful. And you're not going to win the majority of the community doing that. You might have some young hotshots that want to be just like you because they think that that's strength, that's influence, that's power, that's clout. When really, in all honesty, it's shit. That's all it is. It's trash. It's trashy. Nobody really has any respect for anybody like that. And if anybody does, it's fainted. It's fake. It's because they want to try to get something from you. And once they get whatever they're going to try to get from you, they're not going to worship you. And nobody should be worshiping anyone. And I'm at the top of that list. So this skill set you're learning this year, don't try to aspire to be some kind of egomaniac. It's going to be hard for some of you. Really, really hard. Because you're going to find a skill set that, number one, you didn't know existed. And you're going to be able to have the ability to make money that you've never seen before. And it's going to make you feel like you're something that you really aren't, because you are growing into new money. And that was an experience I went through when I was a younger man. New money makes you think that you're better than you really are in all aspects. And it makes you a very toxic, ugly person. But you won't see it that way. You're going to think that I should be arrogant. I'm justified. Look at all the things I can do now. Look at the money I can make. I'm better than that guy, that guy, that guy, that guy. That shouldn't be your motivation. It wasn't my motivation initially, but when I found success, it made me think that way. Because I was a weak young man, constantly seeking validation. And as a 50-year-old man, I still seek validation because I can't get it from a family member that's passed away before seeing where I am today. So it aches in me. So if you never start it, you won't fall victim to being drugged back into it again. Because the public isn't going to give you what you think. You think they're going to worship you and lift you up on a pedestal. That's so short term, and it's not even worth it. Living your life principally oriented, purpose driven, trying to make a positive impact in other people's lives, not trying to shit all over them because you think you're better than everybody else. If you see anything in me, understand this. I am absolutely convinced that there is not one single trader on this planet that can do this better than me. But in that same sentence, because I know that, doesn't give me the right to talk down and shit on everybody else. I'm giving you my time. I'm giving you my life's work because I want to help you. I want to see you do well. I want to see what you'll do with it. And I know, just like I've been talking about the last couple of minutes, some of you are going to abuse that power. And you're going to regret it later in life, like I did, because you acted like a fool. Because you wanted to be significant. The significance is helping other people. Helping other people be better than where they are now. And that feels way better than anybody saying, "You're the GOAT. Dude, you're the GOAT, man. You're the GOAT." I ain't no fucking GOAT. Don't call me a GOAT. That pisses me off. I can't stand that. I'm not the king. I'm not the GOAT. I'm not the greatest of all times. I'm ICT or Michael. That's it. But a lot of people out there want to be called the GOAT. And they don't have the accolades to justify it. So with that, hope you got something out of this today. Hope I didn't bore too much of hole in your attention span. I'm sure some of you already logged off thinking, okay, this guy's just rambling on, but the market ain't moving, but it did what we were looking for. As small, as surgical as that was, that's all that was necessary for today. And when it does it, you stop. You move to the sidelines and be content. Even in your studies, be content with that. Close your charts, annotate them, and think to yourself, wow, we had a laboratory experiment today. We watched live price action. It behaved in a manner that was reasonable. It was expected. It made perfect sense. And now that it's done it, it's right back inside the range where everybody else is trying to figure out what it's going to do next when you don't need to worry about it. Isn't that power? Doesn't that give you a sense of calmness? There's no necessity for you to know what it's going to do next because the profile of this day indicates that it's 50-50. So if it's 50-50, is that high probability? No. You're trying to gamble. You want to have a move. It needs to be doing something because you are in front of the charts. It owes you something. No. Turn your charts off. Go do something else. Be content. Even if it moves a lot from where we are right now, who cares? Go back in tomorrow. I won't be live streaming tomorrow, and I won't be live streaming on Friday. I will be doing video work, so that way I can catch up with the lectures because I've been doing these live streams, pouring into you through that, but I want to do pre-recorded lectures too. So I want to get back to doing that and populate the channel for the 2023 mentorship lessons and such. So that's what I'll be doing over the next couple days. And also doing some interviews with some of the profitable students. So I will bid you a farewell. Have yourself a very pleasant afternoon, evening, whatever you are. And until I talk to you next time, be safe.